Good afternoon, everybody, and welcome to Live Market Analysis ASX edition. My name is Carl Capolingua. I'm the Market Analyst over here at Think Markets Australia. It's a pleasure to be with you as we delve into the depths of your Aussie portfolios, try and pick some winners there, maybe kick out some losers, and add some fantastic new trading opportunities. Let us very quickly talk about the agenda today, which is simple. It's Ask Me Anything. Over to you. There should be a chat window somewhere in your Zoom meeting. If you're joining me on Zoom, type in the code of the stock you're interested in, and I'll give you my best technical and fundamental analysis. And if you happen to be watching me on any of the streaming services, that is YouTube, LinkedIn, Twitter, and Facebook, happy to take your requests as well. Let us head first and foremost to the charts, where I tend to spend most of the time. Actually, before we do this, I'm going to head over here because a little bit of a theme I'm noticing today on screen is the HSMPI. Sounds a bit obscure, sounds a bit irrelevant. Okay, I get it. What it is up here, the Hang Seng Mainland Properties Index. So it's Hang Seng is like Dow Jones or S&P Standard & Poor's, who make all these obviously make many of the indices that we're familiar with. But Hang Seng also makes some indices to do with the Hong Kong and Chinese equity markets. And we can see that we are seeing quite an impressive gain today. Just off screen here, I can see it's about 6%, a little bit off highs, but that comes on the back of the move. If this is Tuesday, that's Monday. So Friday's move, we were up considerably on quote unquote rumors, potentially reports, if you will, that there is some stimulus for the Chinese economy coming from Beijing. So I think it is a key theme that may influence the resource companies we're going to look at today. And we have seen, just even today, a big turnaround in the fortunes of some of those resource companies. And maybe another one of the Chinese property indices here is worth looking at. That's the CSI version of the same thing. And we can see how the A50 shares have clawed themselves out of or away from what could have been a very slippery slope. So let us head then, as I said, to the charts, and that may frame some of our investigations today. Somewhat maybe for the first one, which has come through from John on STX Strike Energy, a gas producer locally here in WA. And if I'm not mistaken, does supply some of the mining companies over here on the West Coast. Pretty good trend. So we'll start off looking at the technicals, is what we do, and then we'll have a look for the stocks that we are interested in buying, or at least I'm interested in buying, that we will also look at the fundamental valuation shortly. So the chart, first thing I do, many of you have seen this before, so I won't take too long, is look at the short and long-term trends. Short-term trend, that's the 21 and 34 EMAs. You can see there on the left-hand side exactly what they are, no secrets from you. And 144 and 233 gives me the long-term trend, both of those are up. So great first place to start is seeing double green on the screen. Then I like to look at my price action. So that would be how peaks and troughs are going. And we can see potentially here, we did see a reversal in the price action. And I might have even said exit some below 43, which would not have been a great thing to do, no doubt. You would have been disappointed if you did that. But I stand by it. That is just my methodology. Notice, though, when I say exit some, it's definitely not exit all. And I said if you've been enjoying the uptrend in strike, you know, the lower points of supply, you can see the price action drawn in here, and the break beneath the 2 points of demand would suggest that there is some supply coming into the market, and therefore at most you'd be exiting a third of your position, which would mean at that time you'd be retaining, by definition, plus 2/3, and you haven't really had any reason not to continue to hold those 2/3, I believe, up to this point. Do you have reason to add to that position? The price action now, let's investigate that. So if we start from here and start drawing them in, I think we're going to go up to here. Then we're definitely coming down. That is the same, as in the same low. So not a higher high and a higher low, down to there. And then up to here, we don't know where this next trend is ending. So we are back into higher peaks and higher troughs, that's for sure. Are we seeing the last point of demand, which is in the light green zone? Are we seeing that nicely at or above the second from last peak? Now, if this is the last peak here, so we'll label this as P0, yeah, P0, it's the last peak. And let me draw that in a color that you can actually see. So if we call this P0 there, and the last peak therefore would be P1, and we can see that the last trough, which is, let's call it T0, is not at or above the second from last peak, possibly because we are seeing some compression coming in from what is now officially a major point of supply up here around that 50-cent mark. And we should not be surprised that 50 cents, a really important round number for companies in this range, was a point that instigated some excess supply in the market. So compression, I think, makes sense. Candles are pretty good. You know, certainly if we're looking at this one here is very good, pretty good, excellent, indecisive. And then today it's hard to tell. That's a live candle, so let's discount it. And let's say that, once again, every reason to hold on to this. I'm not 100% on the buy side yet, although I'm not far away from it. And I just want to see, give me one more candle, I think, based on yesterday's indecision candle. I think it would be prudent to wait for one more demand side candle. What does the demand side candle look like? It looks like this one here. The black outline with the white body. And you could have one that either looks like that or its best friend, which looks like this. Let me actually just move this down a little bit so I can draw its best friend next to it and make it look a bit like that. So if we saw either of those candles in and around the current price, then I would be more than happy to add back that 1/3. And you say, okay, Carl, you sold it at 43, you're buying it back at 50, that's just silly. I say, that's your opinion, it's just my methodology. So if we saw those candles in there, I would go, so I don't know, if see these, then happy to go plus 1/3 again. Let us head over to the Refinitiv Icon spreadsheet and see what we can find for strike. So we are pretty warm on the chart. We're just waiting for a really nice demand side show, and let us see then what the big brokers think of it. Don't have a lot of coverage here, just 4 of them covering, according to Thomson Reuters, the big financial services data gatherer. And this data is coming from their Refinitiv Icon product, from which this spreadsheet's derived. And Thomson Reuters will go and survey various brokers, the biggest brokers in the business, teams and teams of the smartest smarty pantsers analysing companies, and ask them, for example, what is their revenue estimate for FY23, 24, 25, 26, and then their gross income estimate, EBITDA, and et cetera, et cetera. And by averaging those out, we get a consensus number, and also they'll ask the brokers, what's your target price generally for the next 12 months. And we can see here that the 4 brokers we have an average target price of 56 cents, which allows about 14% upside from the current price. The highest broker target was 58. The lowest was 54. That's interesting. So even the lowest target is above the current price. That's interesting. And in terms of their ratings, we've got 4 buys, no sells. That's important. Next place I like to go on this spreadsheet is to the EPS line. And I want to see bottom left, top right growth. Not the case. It's a company that hasn't made money up to this point. In fact, isn't expected to make money even this year, but will make money from next year, according to the brokers, and then grow those earnings quite steadily and strongly. You can see massive growth, really, 0.3% into 1.2 cents and then 4.3 cents to give us, if I make this match, something that can give us a positive number for a compound annual growth rate. You can't start from a negative number, obviously. 278% growth, which seems astronomical, and that is simply a function of the fact that it is coming into positive earnings. It is a commodities company. It's an energy company, so typically prices of the commodities can be an issue. So generally, I will go a moderate risk on those by default. I'll show you low, and then I will show you moderate for your own reference. In terms of the valuation, 42, is that a reasonable PE? Well, it's hard to say based upon historical PEs because they don't exist, and it's impossible to say based upon future PEs because, you know, really it's just starting to go to earnings. So is that the right PE? Look, I'm going to say for a commodity company, probably not. I think you might even, dare I say, divide that by 2. But I'm not going to guess without doing sufficient research into the company that is really breaking it down, understanding what they're doing, where they're doing it. I don't think I can come up with, on the spot in this format, a relevant number for you. If I can suspect, just let me suspect here, that we go for something more like a 20, which I think would be reasonable. You can see these numbers are starting to become more reasonable, and this is just gut feel, nothing more than that, and experience, ladies and gentlemen, in terms of using this spreadsheet over and over again and knowing a bit about some of the companies we're going to review. And you can see we're getting a number there, which is not completely at odds with what the brokers are saying, and certainly still allows some upside from the current price. And what I'm trying to do here is understand whether there are any red flags in terms of following through on the analysis we did on the chart. And I can't see any red flags here, but let me say the spreadsheet is struggling to value this one because of the limited amount of information we have from a limited number of brokers. Well, that is the format, ladies and gentlemen, of how it works. Everybody knows how it works now, so should be an incentive to get your requests in for today. Let me do some that have been welling up on Twitter during the week from my followers on Twitter. If you don't follow me on Twitter, jump on and do that. So from Raju, we have RFT, which is Rectifier Technologies. Let's head back to the default zoom. Doesn't look bad, Raju. I just don't think it's knocking my socks off. It's certainly a warm chart. I wouldn't say it's a hot chart. Back to the start. Okay, always back to the start of the checklist. What are the trends? Short-term trend, it's okay. It's light green, at least. It's heading up. What's the steepness of that trend? Is it very flat? Is it very steep? Is it accelerating? So that green zone, that green ribbon is getting wider, or is it decelerating? The green zone is getting narrower. It's pretty flat, and I don't think it's accelerating really, is it? But we've got an uptrend there. We've got a long-term uptrend, so not bad. The price action, dare I draw it in? I can't even draw it in there, but let's just agree that it's very flat. It's very overlapping. And this is what I say is, well, not great price action. It's not great price action, because when we put it into perspective of something that looks like this is great price action, okay? And maybe I even drew this a little bit too steep, but we want to see very shallow pullbacks, very small pullbacks compared to the moves higher. And as I said in the first example we prefer to see the last trough coming in at or above the second from last peak. And really all that's doing, I know that's sort of jargon, we call that T0, we call this, change the color so you can see it. Let's go T0, and this is P1, and this is that should be P0, of course. So let me change that. We say that T0 is at or above P1. So we know that P1 is a point of supply. That's what the POS stands for when you see it in today's presentation. We know that T0 is a point of demand. And we do want to see that as we go forward, previous points of supply acting as future points of demand. That's what this is all about. And it's really about ex post regret, because we know a bunch of people sold here. How do we know a bunch of people sold here? Well, the price went down. That's how we know. If you're not sure, the price went down from that point. So when we get here, those people are thinking they're very clever that they sold. But when we get, say, here or here, those people are really regretting their decision to sell out at P1. And the smart ones will say, you know what, this is good. I need to get back in. But they can be a little bit stubborn and a little bit cheap, the people who got out at P1. And they'll say, look, I prefer to get in as close as I can to where I got out. So, the opportunity cost of not staying in is limited. And that's why we tend to find that the old point of supply acts as a point of demand. If it doesn't, well, then something else is happening. And maybe we're down here. And this is not very decisive. But if we're up the top, we've got a great deal of decisiveness in the market. The demand side, think about this. The demand side is really convinced, aren't they? Convinced that this is great. All right, it's a great stock to have. And here the supply side, because they're withholding supply, then they are also convinced this is great. That's why they're withholding their supply. Okay, so if we call this price action scenario 1 versus price action scenario 2, clearly we want scenario 1. I don't think we need to do any more on this. We don't have price action scenario 1, do we? I'm not going to go to the fundamental valuation of this. I think it'd be wasting our time. I'm not sure if there's anybody out there that would rush in and buy this. I don't think it's bad. Don't get me wrong, Raju. I'm going to give it 6, 7 out of 10. If this is your favorite company because you did the research and you just see the most amazing things out there, I'm certainly a hold on it. Happy holder. I'm just on it a buy. What could change it into a buy? Let's see some better price action. Let's see this nice, clean, even if it's only a small pullback and a small rally coming in, let's see that clean price action come in. Let's see the candle stay. You can see by the choppiness of the candles, the fact they look a bit weird, don't they? A bit sketchy. Look at that candle there. The open, the high, the low were all the same price. It's extremely illiquid as well. If we go down here, we're seeing not a great number of shares traded. Look, it does get to 1 million every now and then, but often, 200,000 or so shares. I think we've spent enough time on this. I know I just spend some time on these, even though we're probably not going to buy them out of respect for the person that's asking them, obviously, but also I think there's some learnings in every chart that we're going to look at in these sessions. Okay, let me knock these off just so I know they're done. I won't have to go backwards and forwards on screens. But Duratech, this one's come from Jason. It's one we've actually talked about many, many times. If anything, we said maybe if it closes beneath there, sell a third. Never did. That's good news. Kept going. For me, this is a really scary sign for me. I'd be watching that. And certainly, I reckon even on that day or the day after, I would have been looking to sell some. Probably would have been the wrong thing to do, happy to admit. And then as around about here, looking to add back in, even if I had gotten out. There's a plus 1/3 there. It's a plus 1/3. These are a few places in previous analysis we've talked about where to add these. If you're not sure where they are, let me change that color so you can actually see those little markings on the screen. What do I do here? Happy holder. Do I need to get out? There's a little bit of supply in the market up here. Not great. Consistent black candles, but you can see how much progress those consistent black candles have made to the downside. Not much compared to how much the demand side, how much progress the demand side made prior to that move down. So happy holder. I think the short-term trend still looks very strong. The long-term trend is still very strong, and there are no obvious signals, certainly nothing as sinister as that to tell me to do anything but hold on to here. So 100% hold. Would I buy it here? Oh, look, it's a bit of a maybe. Today's candle is still live. It hasn't finished. I would suggest that it would really need to close above the bearishness of yesterday's candle with its upper shadow. And that high there is 107.5. So let me suggest to you that if it can close at the high of the trading session, I know there's a few conditions here, but this is what I like to see, at 108 or better, then I could add 1/3. I won't write that in, but let's take that as the strategy going forward. Look, I'm a little bit curious. Let me head over here. I think we'll do this very quickly because I don't think we will have any broker coverage here. Let's go DUR. Maybe we will. No, we don't. So we can keep moving on that one. I did try for you there, Jason, on that one. The next one we're going to look at today, we definitely will have broker coverage. Macquarie Group. I could do this one extremely quickly here, and the short-term trend is down. The long-term trend is hard to tell, really, isn't it? It's very flat, it's very tiny, and it's orange. Let's say it's not up. We can certainly say that. We've got some pretty clear points of supply, I think, working in the market here, and sort of around there, potentially even around here, and we are working against some points of demand in and around this zone. The price action is extremely overlapping, but it is heading down. That's not great. And the candles, I think, look, there are more bearish black candles with upper shadows in there than there are bullish candles. This is not a buy for me. I think buy is completely, totally, utterly off the table. And I know many experts out there, talking heads in the media, will tell you Macquarie is quality. Wow, isn't Macquarie a quality stock? Maybe it is. I don't know. All I can tell you is that all those experts who are talking right now, well, they're not buying. So if they're telling you it's quality, they're telling you they're going to buy it, they're telling you it's that one stock portfolio, it's the one you hold forever, that's all talk, because what's actually happening, the buying, the selling, where the rubber meets the road, I'm going to argue that there's more supply out there than there is demand. Why is there more supply? Because people are a bit unsure about the Macquarie outlook. Why is there not enough demand to soak up that supply? Because people are a bit unsure about the Macquarie outlook. So, you can either listen to stuff and act upon what you think, or you can just act upon what you see. And I'm telling you what I can see. Let us keep moving. Would I sell Macquarie? I can't see any reason to own it. Let me say that. Trevor did ask for banks and insurance. Look, I think it's fairly topical, so let's look at it, because ditto with Macquarie. And I know I've got many listeners that are looking for dividend stocks, or they own these stocks and maybe wondering what they should do with them. Now, remember, this is everything we're going to discuss today is general advice. I can't tell you what to do with things, but I can tell you what the market thinks about them. And I can say that the market isn't exactly wildly enthusiastic about ANZ Group right now. There is more supply than demand. I would say this key demand zone here, potentially if it slips, we could see it move sort of into the next demand zone around $21. Would it be the biggest bargain in the history of mankind down there with a fantastic yield? Hey, I don't know. It's not my style. I need to see double greens, and all I can see is double pinks. And I'm happy to concede that this today might be the best place to buy it before the most almightiest of uptrends. I get it, but I'm just not seeing that in the probabilities. And I tell you what, if it starts to do the stuff that I like to see, which is, let me kill that, change it to a color we can see, it starts to make high peaks and high troughs to tell me that demand is coming back in, that supply is diminishing, we're working through the supply in the system, that we start to crack and break through with wonderful price action, wonderful white candles through areas of supply, then I'll be all over it, make no mistake. But I just don't see the reason to do it now. Will I look at the valuation for ANZ? No, I don't. I won't, because I don't care what the valuation is for ANZ. I couldn't care less if it's cheap or expensive, because the market is telling me it ain't that cheap. If you think it's cheap, that's you're entitled to your opinion. CBA, just going alphabetically, I'm going to go ditto on that. I don't need to do any more research on this. Let's look at NAB. NAB probably looks the worst of the lot, and I do hear from time to time in various media outlets that certain clients of a certain broker, they're buying this like crazy because it went down. But that is how retail investors think, to be fair. Westpac. It looks horrific. Let me tell you that. It's right up there with NAB as one of the worst, and I can't see any reasons to buy that one. And then, of course, we've got stuff like Bank of Queensland, which is horrific. And if you've been buying Bank of Queensland because it's cheap, you're doing the exact opposite of everything I teach people in these sessions every day or 3 days a week. And that is really, I think, a really foolish way to look at the market, is to say, you know what, this is cheap, it's got a great dividend yield, and buy in the face of that. That's just foolish. And if you say, hey, Carl, it'll go back up again, I say, well, maybe it will. Well, hey, maybe even probably it will. But I'll jump on. Right, when it starts to go back up, I'll jump onto it, because it'll do the things that I need it to do. But it's a traffic light system, and fight the traffic light, at your own peril, for all you value and dividend investors in there. Great, isn't it? It's just amazing to get a 6% yield, dividend yield, and then lose 20% on your capital. Not a great way of doing things, if you ask me. Now, the question from Trevor, let's move away from the banks because they're a joke. Let's go to Suncorp, because some of the insurance companies are looking pretty good. Of course, insurance companies love it when interest rates go up. We might even get another interest rate hike today, because they take our money, they invest it, and with those higher rates, they've got higher returns. And let's face it, probably claims are about the same, so it just goes straight into the bottom line. Suncorp is trying to offload its banking arm to ANZ, so it's not really a bank anymore. And I think the market's looking forward on that, not backwards. And it's saying, hey, it's an insurance company. But I think these look fine. So if you've got to go financial services, and these companies still have yields, but then some of those experts are saying, I can never buy insurance because I don't know what natural disaster is coming next. Well, okay, smarty pants. But I think Suncorp's aware of the situation too, and they've taken the steps to hedge themselves against that. I mean, that's how insurance works. But look, for what it's worth, I think that still looks good. IAG looks better, not worse. I know we've talked about in these sessions, and NHF, which is health insurance. Maybe that's the one way you can go about it. I think that still looks very good. But as I said, insurance companies love it when rates go up. So if anything, this could be hedging your portfolio. Hey, am I telling you to buy any of those insurance companies? No, I'm just saying if you've got them, you can hold them. Not to say that we haven't said, look, plus one third there on NHF in the past. Okay, Trevor, you're done. And then CBR for Matthew, and then I can close that window. Matthew, not for me. Look, I'm sure this has got the most amazing prospects. And I'm sure if you got on whatever chat room you found this on and told another 100 people, it probably might not even move a cent. And hey, this just needs a pulse. And you'll know it's got a pulse if you come down here and you start to see a blue line, because you can't even see the blue lines there. And that's just interest, then you had it there for a day, and look what you got next. I mean, you had a half decent day here. This thing's dead in the water until we start to see high peaks and high troughs to tell you that demand is building, and it's building so much that it's it's overwhelming the supply that's in the system. Is there supply in the system? Yeah, I think there's a little bit of supply there. Are people supplying this hand over fist like there's no tomorrow because this is a great company? Or are they supplying it hand over fist like there's no tomorrow because it's in the toilet? And that would be my suggestion to you. At the same time, just because there's lots of supply doesn't mean a company has to go down. Because if there's lots of supply, but there's even more demand, the company's going to go up. And there just hasn't been any demand to step in the way. And here's the thing, I'm sure a lot of people thought that this company was really cheap down here. Oh, look how cheap it is. It was $3. Now it's only $1.20. It must be cheap. Yeah. Maybe it's cheap now. I don't know. I think I'm being a little bit brutal today, aren't I? Let's continue on that theme of brutality. I'm going to go back to the Zoomers, then I'll go to the streamers. William, you better have something good for me. I'll tell you what, because I'm in that mood today. It's not bad, William. It's pretty good. Hey, I can sugarcoat this stuff if you like, if that makes you feel better, but saves your feelings. Iress. Look, this is pretty good. This is getting better. It's not great yet, but it's getting better. What's great about that long-term trend is it is not giving me this sort of downside resistance, this pushing me down when I get to it. It's trying to offer me upside support. And look, the only thing that maybe was holding this back was the price action was a little bit sketchy in that it was a bit overlappy, but not terrible price action. You can sort of see through there. Unfortunately, the price action has turned a little bit not great. Is that the right term? But the candles, I think, overall are pretty good. Generally white, not black. I know there's a bit of a nasty one there, but then we've popped up above it. We've closed above a few important prices here, so that was a nice close above there. Like it's showing me all the signs of something that wants to go back up. I think it just needs to convince the market a little bit more. Look, happy holder here, William. Not a buy based upon today's candle or yesterday's candle, but I can see a path to holding it. Now, hold is almost an irrelevant concept. Okay, hold is dangerous. It's not irrelevant, it's just dangerous. The concept of hold is dangerous unless what? ... Answer that question. You don't have to type it in, but answer in your head. This idea of holding stocks is dangerous unless what? Okay, James Bond, right, walks into the Monte Carlo casino to play whatever he plays there. Was it what's that? The 3-card game with the escapes me now. With the villain, the super villain. Now James Bond walks into the casino. What's the first thing he's looking for when he walks into that casino? Is it the curvaceous brunette standing at the bar, looking at him? Is it the bartender to ask for his martini? Is it somebody lurking in the corner, potentially getting ready to throw a bowler hat at him? I think the first thing James Bond looks for when he walks into that casino is the exit sign, all right? Because James Bond knows if something goes down, he needs to know how to get himself out of that situation. And I'm going to put to you that when you get yourself into a stock, what's the first thing you think about? Is it all the riches and all the fantastic, amazing things this stock's going to do? It's going to go to the moon, Or do you say, well, okay, I want that stuff, but I need to know how to get out. Where is my exit point if this all goes pear-shaped? And Baccarat, says Doug. That's the one that escapes me. So let me delete all of this and say, well, if we're going to hold this, William, then we need to know how to get out of it. And I'm going to put to you that if we're closing beneath there, we're in trouble. I'm going to say if we're closing beneath there, we're in substantial trouble. And I'm going to say if we're closing beneath here, I can't see any reason why you would be out of it. Now, there's a couple of things that could happen in advance of that. So watching those 3 zones, okay? And you could, on the face of it, just go minus 1/3, minus 1/3, 1/3, and minus 1/3. But you might even get advance warning. So let's say we do this, right? And we show a lower point of supply coming in. So supply is building, not diminishing, right? Demand is unable to absorb the supply in the system, not more than able to absorb it. If you were to then get, say, a little break of a pod, that might give you advance warning. And this is all hypothetical, hasn't happened yet, but I'm trying to give you the tools to confidently say, you know what, I'm not going to wander around my portfolio completely confused as to what to do. I'm going to know what to do. And I might get it wrong. We've seen, I think, 2 examples already today where I wrote -1/3, it closed beneath that level, and boom, it went straight back up. But let's hope it does, because if you sold a third there, you've still got 2/3 left, and you can always get back in. So if you saw that, you might go a third earlier, and then one of those might even become redundant. You might see a big black candle you don't like, but at least we're not, just fumbling around in the dark, wondering where we're going to get out. If we are at all wondering where we're going to get out, because most people just wonder how to get in. They don't worry about getting out. Okay, this is a good chart to look at, because last time I looked at it, Perseus Mining, I think I scolded the person who asked the question, because I said, hey, there's so many reasons, so many places. It's one we haven't covered for a while, and I think last time I covered it was on the way up, and I said, hey, I can't cover these for you every week, but what you have is how, methodology on how to get out of this stuff if I'm not around, and you had so many exit signals on this one. And I'm guessing, look, Brett, I think Brett asked the question. Who asked it this time? Craig's asked the question this time, not Brett. So you can see here, as soon as Brett sells it, we must have looked at it on this day here, because I did joke that as soon as Brett sells Perseus, this big white candle was bound to happen. And I said, Brett, that's not true. It won't happen. Trust me, if you get out today, you won't see that giant white candle. And lo and behold, it didn't happen. How about that? Okay. What have we got on now? It's trying to find a way, and maybe that's why Craig's asking about it, because we're seeing a higher point of demand come in. We haven't yet seen the supply removal to cause a higher point of supply, and really that's all points of supply are about. That points of supply, so rising. I mean, it's good to know, okay, we want to see higher points of supply, high peaks. But why? Rising points of supply equals supply removal by the demand side, right? And that's why it's important. Do you want to see the demand side remove supply? Yeah, you do. We're not seeing it yet, but I think today's candle is really good, but it's a live candle, Craig. So let's see how it closes. If it closes here or better, and closes near the high, it's starting to look really good. As in, we've got the nice rising pods in. You've got a nice shadow, downward pointing shadow there as well. So this candle here, I think, is really good. And then backed up by that is really good as well. So I'm painting a picture, actually, which sounds like I'm saying, look, if we get a nice candle here, you could go +1/3. But that's not me. That's not my trading style. Some people might do that. And I'm like, look, I don't think it's a terrible strategy, because if you did it, understand what sort of trader you are. You're a highly aggressive trader. I think you're a very aggressive trader if you were to go +1/3 on a close above that POS, right? But you do have a really sensible place to set some exits, okay? And let's say you bought 100 shares there, and this is how awesome we are, okay? This is how awesome we are. Let me go here for a second and show you this, because no doubt PRU, type it in, I'm going to find, I'm not surprised it's not in there. It should be in there, Perseus, but maybe because I've got a demo account. Maybe Nick, you can confirm Perseus. I'm sure it's on the proper account. This is just a demo account. But we have these things called CFDs, which are commission free, ladies and gentlemen. So, Carl, he's this smarty pants. He keeps telling me to buy in thirds and sell in thirds because he works for a stockbroker. So every time I do that, Think Markets makes $8. You know what? Those CFDs are commission free, ladies and gentlemen. So it costs you nothing. And let's say, and don't forget, trading CFDs is exactly the same as trading shares in terms of your risk reward if you do the same number of CFDs as you would have done shares. So if ordinarily you would, that +1/3 to you equals 100 shares, all right? And you do them instead on 100 CFDs. Here's Nick saying we have to get Perseus at it. All right, good. It's a big gold mining company. So let's say we do the same. Your risk is exactly the same, but you divide this into threes. And this is how flexible this model is. So that if we get beneath that pod, assuming there's no lower POSs first, and we do -1/3, right? You're selling 33 CFDs in this case, not shares, but it's the same thing. And then down here, and you can set these up in advance. So if it all happened very quickly and you weren't there to see it, or you're going away on holidays, whatever it was, the platform would do it for you. Okay. Now you might have a reason to do it. And I know this methodology of just getting in thirds, getting out in thirds, even if you've only entered a third, right, still getting out in thirds. So you're just keeping skin in the game, okay, on stuff that's going up. Now, this is not stuff that's going up. This is a bad example. You might end up with a bunch of odd lots, but you're going to end up, let me tell you, trading like a hedge fund, okay? And you're doing it commission-free as well. So the point of this was super aggressive trader plus 1/3, not me. Why not me? Because you got this to contend with now, okay? And the problem with getting beneath this zone, which should be dynamic support, is it will tend to act as dynamic supply going forward and therefore limit your reward to risk on this trade. So yes, I've told you about where your risk is. And like I said, you need to go into trades knowing where your risk is, how you get out of stuff, right? But I just can't see the upside on this. So it's nothing more than an aggressive trade. I'll leave the plus 1/3 there, but I'm on record as saying it's not what I would do, but maybe Craig, you would do it. I know I'm taking too long on these, ladies and gentlemen. I apologize. I do speak for too long, but hopefully there's just a tiny little bit of education in there, and maybe it's your aha moment where you go, aha, actually, hey, I can see how what Carl is saying is to not care, is to totally not care about where I get in. The price I get in at is irrelevant. Is there a rationale? Is there a reason for me getting in? And if there is, then I get in. If there's a reason for me getting out, I get out. And I don't give a poop about what the price was for any of those entries or exits. It is not relevant what the prices are. It's just, what do I have to do? And I trust that if I follow this model, and I've seen him apply this model now for months now, because I've been watching for months, or I've seen him apply it for years, and I can see this model. I know this model works. I just have to find the discipline within myself and the consistency to just apply it. That's something you need to grapple with. Okay, let's keep going. MAY from the streamers. I think it looks pretty good. One of those energy companies, uranium companies more specifically. We know uranium's going up, and it's getting a little bit of interest in the press and certainly in the social media space. So I think it's okay. Would certainly hold on to it. But, and this one is for Dr. Bullion. Dr. Bullion, I'm going to put to you, much like I wrote on this one last time, could you be bothered? Look, I think it can go to 10 cents. But it might well get stuck at 10 cents because this is going to be an almighty, I always type in capitals, I'm always screaming, almighty point of supply potentially going forward. And it is potentially, it may just go straight through, we don't know. But do you want to take the chance? So, happy holder, okay, assuming you know what your exits are, and I think I've taught you enough, I won't draw them on the screen. You can figure out where your exits are. Because I don't think you want to be stuck in this one forever, right? I mean, I know you got into it around here, Dr. Bullion, or here, or here, or here, and let us hope you didn't get in here, right? And this shows just the importance of being in stuff for a good time, right? Let's have a good time. Let's be in this stuff. Let's not be afraid of being in this stuff. You know, like so many other experts out there, oh, I can't buy that because it doesn't make any money. I don't care if it makes money or not. I just want to know if I'm going to make money on it. But again, if we get into stuff, even if we get in at the top, we need to have this exit plan on where to get out. Okay. I think this might be a long time, not a good time, but a happy holder at this stage. I know that even contradicts itself, because why am I holding it if I don't think it's a prospective buy? And that is the contradiction that we face every time. Okay, let's go to this one. This one's for Adrian. Can we look at a couple of lithium stocks? Of course we can. Maybe we'll do a quick lithium sector review here. I think it looks half decent, Adrian, but it doesn't look great, does it? I wonder what we said here. I'm guessing by all of these downward pointing arrows at the long-term trend zone, I might have said something to you like, hey, just be careful, okay? Because much like with Perseus, well, this is a great segue from Perseus, isn't it? Perseus, I said, just be careful. Your upside might be limited because, let me draw another bunch of arrows on the screen. This zone might be a bit of an issue for you, and it might still continue to do so. So I would say, Adrian, until we are happily and healthily above this zone, until we're putting in price action that looks like this above the zone with some really nice white candles, for me, it's not something I'm interested in. If you've got it, can you hold it? Well, I don't like today's candle, and I would tell you, given that everything else we can see on the screen, the lack of uptrends, the lack of great price action, I think the predominance of black candles in the recent past, this is struggling. And I think today is a great sign that supply is coming back in to potentially push it back down again. So if this was to close at its lows, and you can see where it is now, and this candle is going to change. In fact, it's going to change right now because I'm going to click update. We're going to get a new update coming in the next few seconds. It's looking more like a minus 1/3 event to me than it is a plus 1/3 sort of, chart. You get where I'm going with this. And you can see it actually just came a little bit off that low, which is good for you, Adrian. Okay, you want to see it not just come a little bit off that low, you want to see it close with a big white candle, and in which case I could say, happy holder, but it's not there. I don't know what's going to do. All I can see prior to that is, yes, we're edging back up, but perhaps only to fail again at that trend zone. So it's certainly not something I buy. I can see the tiniest of narrowest paths to holding it, but it's not something I'm that interested in. Let's quickly do your second one here, which is something I would happily hold, but you can see there in the shadow of a very major point of supply, it is potentially struggling there. And look at this, we've drawn some arrows in the past, and we've said, look, if it comes back into the green zone, puts in the right candles, then maybe you could buy it. And I'm going to reiterate that today. Look, if you do see the white candles, it's okay to buy. Do you want the stuff that's okay to buy, or do you want the stuff that's amazing to buy? But I think that's really solid, okay? Where would it go wrong? I think if it's starting to trade somewhere down here, I think we're in trouble. Yeah, because this should be demand in here. The old point of supply should act as demand. And if we're getting beneath that zone, I don't think that's a good sign. Plus, we'll probably be in lower peaks and lower troughs, lower posses and lower pods by then. That would not be good. Okay, super quick here. Just going to whiz through them, unless I see something I like, and then I'll spend more time on it. But Allkem, we might have done a couple of minus 1/3, but keeping a third. And I think that's all you are right now. The most you've got on this one is plus 1/3 remaining to see if you can squeeze a bit more out of it, or if there's a higher bid or a better deal. I don't think there will be. I'll leave that up to you, okay? AGY, didn't get this one, did we? We said, look, if it closed above 55 with a big white candle, it did not. That would have been the plus 1/3. It's a great, follow up from the gallon. It's the sort of stuff we need to see to get the buy. We didn't get it, and then down she goes. Why? Because look at the long-term trend zone. The long-term trend zone, ladies and gentlemen, please understand this. When you get beneath that long-term trend zone, it is a B ... Don't mess with it. And it's not until you get back above it with some great price action, great candles, that I think you need to bother with it. This one looks really dodgy to me. I think, if it starts to close beneath this level here, then you're probably heading back down to here again. That's Argosy. Let us go to Allkem Argosy core, which we've got all sorts of scratchings on this one before. I can't remember what we said, minus 1/3 there. I'm not sure what this one is, maybe even minus 1/3 there. What do we do with it now then? You can see the model is more not wanting to be in it than it is wanting to be in it. Why? Because ultimately, and I've said this in the past, I do think they'll fail at those big points of supply, and we have seen that. I can go hold. The white candles, the lower shadows are helpful. Is it going to be a buy? No, this is a long way from a buy for me, because we've got a great deal of supply in there, and it's going to be reinforced by the supply there. Ladies and gentlemen, I think some of these are more and more, increasingly perhaps, putting themselves into the too hard basket, as in the risk is this is not a good time anymore. This could be a long time, okay? And it wouldn't be the first time a boom has not necessarily turned into a bust, but it's just fizzled. Okay, for a long time. Think buy now, pay later. Think, I don't know, whatever came before that, ladies and gentlemen. AI, perhaps. But this is not looking great. Let me just cherry pick the big ones here. Let me go IGO, which actually today's candle is fantastic. And you would have exited a third on this giant black candle and then bang, straight back up. I've got no reasons for that. Oh, I do actually. There you go. Friday, Tuesday. So here you go. This thing was toast. This thing was absolute toast, 100% toasted, okay? Turn the dial up to 10, it's incinerated in the toaster. But what happened, okay? Something that I cannot foresee. what happened? We started the presentation today with this, ladies and gentlemen. The quote-unquote reports, they are reports, they are rumours that Beijing will come in and stimulate, and guess what that does for the prices of nickel and not so much lithium, but certainly nickel. I think that's why this is bouncing. And this is what I keep saying. I can't see the future. I don't know what's going to happen next. But all I can say is that everything that was happening here is really bad. And if not for those rumours, which may still only be may amount to nothing, I don't think this would have put in those three trading signals, and certainly not today. So, look, can we buy it? I don't think so. I just think you're really hoping on that China situation to come through. If it was to stay big white here, maybe even show me a little bit of a supply side response that's quite limited, and then another higher trough. There's your pod there, higher pod. I might get more interested in it. Okay, but otherwise it's kind of a ditto for this one as well. Let's go to MIN. Didn't even respond to that China pop. I mean, yeah, it's up a little bit, but that tells you what does that mean when something has that sort of news, and yet it just hits this brick wall of supply. It just tells you that the fund managers are there sitting on this one, supplying into this, because they know that the boom is over. Okay, they know that this thing could distribute, and this is not a lithium stock, but they know that once these things that have been in these like the most invincible blue chip, just no-brainer stocks, once they fail to regain those long-term trends, and in fact, hover and then suffer and languish and break beneath them and not retain them, they know that it is just it's distribution now. So I'm a little bit concerned about it. You can see lots of scratchings there that you're indicating you probably don't want to be in it. PLS, got to do this one. You can see again lots of little minus 1/3, plus 1/3. I'm going to go ditto on IGO if you can put in high peaks and troughs. But I just think you're playing this game now where you are potentially getting chopped in and chopped out. Okay, and look at all the dark pink where there's going to be supply. Look, it's certainly not the worst one I've seen, but I just don't think it's the best one either. I'm putting some serious question marks over the charts of these lithium producers, and I know you're going to shout at me all the reasons why we should be owning lithium right now, but I'm just not seeing it. Okay, I need to pick up the pace. Let us go to VSR or Barry, which still looks great. I do recall this, I'm pretty sure, if I'm not mistaken, Barry, we said something about after the big white candle, and I might have said something like keep an eye on it and wait for the next white candle. Correct me if I'm wrong. Well, that would have been down here. I've got a hunch. I think Barry's on this one. So I think you're okay, Barry. I don't think there's any reason why you need to get out. I'm hoping you're close here. Maybe you made 40, 50% profit. That'd be nice. Let's see how much we can get out of this. Let's see if there's more in it. 10 cents would be a logical target. I think you would sell some there just because it's a nice round number, but not all. I can't see. I mean, this was a really bad candle. So this candle here would have really given me the jitters. And this candle here as well, but there was no real follow through, in fact. So that's okay. And this candle is great. Today's lower shadow is great. Let's watch today's candle. Don't want to see it close too black from here, but 100% hold. I can't see any reason why you would sell this at this stage, Barry. So I think we're going to continue to try and ride your profits on that one. Would I buy it here? It's a bit of a ways away from the light green zone. You can see that was the place to buy it. After the big white candle, after the huge interest spike. So now people are looking at it. It's had a pullback. Why? Because of all the dead wood. Dead wood, dead wood, dead wood, dead wood, dead wood, dead wood. Okay, CBR, we looked at the dead wood there today. The thing that's going to change the dynamics for CBR is this sort of volume. So once that dead wood is out of the system through these bars through here, you want to see that demand pop in. Why? Because of whatever the initial stimulus was. That's the buy point. Maybe even here is okay. I'm not sure today if today constitutes a buy, but certainly a happy holder. Great little case study in finding these little ones that go from, they've gone from hero to zero, but how they can find a way to go back to hero again. Okay, and it's not the CBR chart unless you see that huge white candle spike on volume. Okay, then they're back in play. We're not putting the whole house on this. Okay, so all the people out there, oh, you can't buy that. It doesn't make money. Oh, It's what's the word? It's destroyed. I know there's another word. It's destroyed shareholder value for years and decades. You know, all they're doing is burning through shareholder value. Mate, I don't care. Is it going up? Can I make some money on it? That's all I care about, because I'm not going to bet the farm on this. I'm going to put a bit of money on it and see if I can make some more money on that. Hi, Hanelli. How are you? Hanelli wants James Hardy. I'm in a mood today. Okay, let's keep going. I think this is fine. I know Hanelli's on it. Happy holder. You can see where we started to get in down here. There's nothing so sinister in here to tell me to get out. Even today's candle is a bit lousy, isn't it, Hanelli? But I think it's fine. Look, you don't want to see today's candle proliferate. Is that the right word? Or perpetuate itself. You don't want to see it propagate itself. There you go. 3 words, which I think tell you what we don't want to see. We don't want to see more black candles coming in here. And we certainly don't want to see it close beneath this sort of area around here, because see that white candle? I think that white candle is important. So beneath there, I think you'd sort of go minus 1/3, unless, or if you didn't have a signal prior to that. But once again, Hanelli, getting into this, and I know you know, because I know you're a great supporter of these sessions. I know you know how to get out of this. So happy holder in the meantime, though. And I think that's what you're after. Ben's asked for Duratech. Ben, we did Duratech at the start. Happy holder on that one. Hanelli's also got CRN. I'm whizzing, I know. Maybe we'll come back if I can get to the bottom of the list. Stop typing in your stuff, everyone, and then maybe we'll come back and look at, say, some of these fundamentals in the valuations. But let me at least give everybody a technical so nobody walks away today without at least a question answered. Coronado, maybe I get why you're interested in it. You know, maybe it's cheap. I don't know. Coal prices seem to have turned back. At least the thermal coal prices have turned back up a little bit. The tiniest blip on the chart. I think you can hold it, but I think we're in a bit of trouble here because, you know, with the short-term trends are down, long-term trends are down. If it was to close beneath this, well, it's marked there, 124, it's toast, it's gone. But there's a few white candles to give you reason to hold, but really all you're doing is holding to try and get a better exit. And maybe it's there, you know, before it starts to do this again. So just watch for where the price action starts to roll over, and then you're just trying to get a slightly better exit than what you've got, what you could get today. And I think you might get one today because there's a few white candles in the system. As long as the white candles stay in there, you're okay. Hold on to it. Would I buy it? No, absolutely not. No chance of me buying this one for obvious reasons. All the reasons we've already explained. EML, this one's for David. Oh, look, it got going, didn't it? I mean, I thought through here, looking very, very good, and then it just hasn't gone on with it. I think you can hold it. I don't think you want to own it, though, beneath here. I think beneath here we've got some issues, but otherwise you can hold it. But I just think if it was going to do that next leg, which we've been waiting on, I think it might have done it by now. So that's concerning in itself. Another example of going too early, and if I told you to buy it, I totally accept I've gone too early, and I get excited sometimes. I don't remember if I told you to buy it, but I feel I might have. But certainly when I look at that candle, I get a bit excited and I go, look, stuff the fact that it hasn't actually got itself above the long-term downtrend yet, that the long-term downtrend at that point hadn't changed color, and we hadn't seen a pattern more like, let's go back to James Hardy, where you get where I'm going with it, David. So we hadn't seen this sort of price action where we're going from not only, as you can see the fail here, right? Even here, we're not sure yet. But once we start to put in the white candles and the high peaks and troughs above that zone, then it starts to become, for me, a valid turnaround play. And look, I'll be the first to admit that I do get excited sometimes when I see the big white candles, and I think maybe I got too excited on that one. Apologies. Let's keep going. NEU Neuren from Colin, which should, I was going to say, should still be okay. We haven't looked at it for a couple of weeks, but we've got problems here. So first shot across the bow, certainly. And if you haven't taken action, you might want to. We're okay as long as this last trough, it is a trough because we've got high, high, and high, low. So there's your pod. Let me label it as such, and with a color that we can actually see. There's your pod. That's it now. It's really very simple. I think once you saw this candle, though, I think that was your exit. And I know this is for, who did I say this one was for Colin. I know in your heart of hearts, Colin, I know you saw that day and you probably thought at the end of that day you probably needed to get out, or as that day was evolving, I know you thought, Carl's not going to like this. Look, if you're not out of anything, I think you can hang on to it, what you've got, but it's very clear now. If we close beneath here, we've got problems. If we throw in another black candle, like let's label this candle 1. So if we see candle 1 in and around, say, the red zone, where's the red zone? It's about to appear somewhere around here. Because notice how that short-term trend has gone from offering support. It probably will now offer resistance, dynamic resistance. So if we see another one of these black candles in that red zone, then that could also be minus 1/3. There you go. And this was 100% minus. In fact, you get beneath that, you're minus 2/3, really. We're in trouble. So it's one of those, it was a hold, it was a buy, obviously, on the basis of trying to get more out of it. And it didn't happen. That's it. It didn't happen. So get the message, move on. Okay. It's still a hold, though, because of the strength of that point of demand. Okay. But we may find we're only holding to get ourselves a better exit price. S32 is coming up next. I can do this really quickly for Peter. I can't see a single reason to own it. I'm pretty sure I told you that last time. It's your decision as to when you think, hey, there are reports of Chinese stimulus and maybe that's going to be good. But even then, look at what a muted response on that is. Such is the disdain among fund managers for this one. Why do fund managers not like it? Why don't they like it? It's a good stock. It's got lots of minerals all over the place. The world needs minerals. I don't know. Don't ask me. Go ask the fund managers who are obviously selling it. I wouldn't have a clue. HMC. It's starting to look very interesting. Would I buy it? I'm going to go ditto on the fact that if I told people, I don't know if I did, EML told them to buy that too early. I think this is still too early here because, the leopard probably is not going to change its spots. The third time, I don't know, maybe it's the third time lucky. But let us require HMC to really dominate that long-term downtrend zone before we took a punt on it. And it's just a turnaround play. Turnaround plays are high risk. Why turnaround plays high risk? We're just dipping a toe in the water on these turnaround plays. Like EML, you wouldn't have gone and bet the farm on it. You dip the toe in knowing that, hey, if I lose a toe, it's not the end of the world. I can deal with losing a toe. Okay, let's keep moving here. I'm going to head to the YouTubers. Appen, of course, we can look at Appen. We should look at Appen. It's had that move a bit like EML. We're seeing a bit of a theme evolve today. Do we jump onto these on the basis that, yes, you've had some tremendous white candles, some great interest coming in the volume, significant supply removal, right? Because a lot of dead wood on this one. Maybe there's a chance we make that higher trough and we keep going. Well, let us see it. Let us show the caution I think this one requires and deserves, and let us see first the push back up, a point of demand now that is trading above the old point of supply. This is a major point of supply here. We need to see it now act as a point of demand, pushing prices back up. Okay, if it does that, if it throws in those big white candles we talked about before, or the white candle body with the long lower shadow, then it's going to start to look interesting because, yes, this is turning up, but I don't feel we've dealt with this yet. With this guy here, we haven't dealt with it. And, ignore this guy or girl. I don't want to be sexist. Maybe it is female. I'm going to get myself into trouble here. But it ain't quitting just yet. So let us make sure that we've got above it. Okay. Those long-term downtrends, as I say, ignore them at your peril. Okay. I'm going to get to the chatters here. DYL. This one's for John. I've talked about uranium. Maybe this is the time. It's starting to look good. I like the candles. I even like the price action. I think we're hovering above that long-term downtrend. But John, how much of a sucker for punishment are you? John's probably got it. John, if you've got it, I'm a happy holder. If you don't have it, could I buy some? Did I tell you to buy some down there? I can't believe I did because that's crazy. But uranium sucker. There you go. Understand what you're getting yourself into there. FWD looks great. I know I've put this in the tweets. $2 might be a bit of an issue, John, but probably just a pause. But happy holder there. I don't think there's any reason why you shouldn't hold it. I'm guessing you're on it. This is all still good. What I buy it here, no, it's too far from my green zone, and I don't like the candle from today. But it's not a sell candle. It's just a pause candle. Happy holder here. No complaints. There's nothing so sinister in the trend to suggest that we can't continue to hang on to that one. And it's Silex, obviously, and then Weebit is going to get a tick from today if that candle can stay there. So if it does close near the high from today, I think it's got rid of yesterday's candle, and then it's okay. But if it does close nice and high today, I think it also gives you a really sensible place to put your exit. Because if it gets beneath that there, then I think we start to bail out of this, especially with this black candle, as I don't like this black candle, because we might be just doing lower peaks. So I'm not a true believer in Weebit at all. I couldn't care less what their technology is. I just want to know if I can make money on it. And happy to hold, see what happens there, okay? But I've also got an exit plan. I must have an exit plan. LLL, I missed on the lithium review, so let's do that now. And I just need to find it in here because of the way, that's not it. But that's a big, the loyal lithium, that's a big white candle. Keep an eye on that. I probably want to see a bit more volume. I don't think that's convincing. I think it's okay. Let's say that we wanted to get $1 out of this. We might not get it. I'm going to say you just take a little bit of a precautionary measure beneath there and just do minus 1/3. But don't forget that still means you've got plus 2/3 holding on through here. Okay, that's how I would do that. Would I buy it here? No, for obvious reasons. It's not showing the great price action and the white candles and the lower shadows we want to see. There's a nice lower shadow there, and that's why it gives us, I think, a sensible place beneath which we can exercise some risk management, and that's all that is. Let us go. That was for Eric. Let's go to David. David, I've done APX, which is great. XRF. Let's have a look at that one. Still fine on this one. What did we say? Minus 1/3, minus 1/3 on that candle. I'm not sure why. Go check the last time. You just Google live market analysis and XRF, and you'll see the last time it came up on YouTube. Happy holder here. Would I buy it? Well, I don't know if I game. I think there's a bit of supply there, but it looks fine. I mean, this is all good. This is all good. That candle there is fantastic. But don't forget, once again, we need to know where our exit is. And I would say if we're closing beneath that, we've got some issues, and therefore we would do the minus 1/3 there. And if we're going beneath that, minus 1/3, and let's see how we go from there. Otherwise, happy holder. It's close to a buy. It's very close to a buy. But I'm just going to refrain at this point in time without a nice big white candle. Let me just keep cruising here. This is for Peter REH, which is still fine. I know we've looked to buy this one, and you can see why. And I want to say, I even might have said it down here, because this is where you've got the really nice turnaround play. And look at these candles. These are the candles you need to see, ladies and gentlemen. I can't draw enough arrows at those candles at and above that long-term trend zone, which has turned around. And again, here's your theme. Don't muck around with it. You want to be above it. So happy holder here. This is all heading in the right direction. No reason to sell. Would I buy? Look, maybe not in today's candle, but on the next white candle, lower shadow, happy to add some risk there. Let us go MAG. Which is MAG. It is Magmatic Resources. I think you're in trouble here. This is what we call the species ending event, and then you've just had so little response. Did it get cheap? No, it didn't get cheap, because the market's telling you there's no interest at the lower prices. My daughter, she's 13. She's in year 8. And she's got a test today about the laws of demand and the laws of supply. And she was asking me about it last night. We're doing study ahead of this test, and we heard, and she hates doing economics with me, because I tell her stuff like, she says, Dad, law of supply equals prices go down, people supply less, was the prices down? Yes, they'll supply less. They'll supply more when the price is up. Okay, and then she goes, law of demand equals price go down, demand more. I said, not so sure. And this is the perfect case study here. The price went down. Did people supply less? No. I think they're still supplying like crazy. Did people demand more? No, they didn't, because it's a piece of junk. And I do say stuff like this. I say, look, just go and ask your teacher. Just when she says this is the law of supply and this is what, just say, really? And just leave it at that. No, don't do that. That's what I keep telling her. She hates studying economics. And I say, look, it's none of this stuff is actually true. Let's go to RBA decision. We might get a 15 basis point hike, I think, today to round it off to 4%. RNU, Renascor Resources, is dead in the water, Mukesh. I don't need to tell you why. If you've been listening today, short-term trends are bad, long-term trends are bad, the price action's bad. There's no interest here. And you may tell me that these guys have the most amazing graphite resource in the history of mankind, and it's just their next big move up is imminent. And I'll say to you, when it occurs, I'll be all over it. But until then, I have no interest. I have less than no interest because I'm being brutal today. I normally sugarcoat things in these sessions, don't I? But today I'm being brutal. Happy holder here, but just be careful for you, Joanne, that we don't want to get beneath there. If we get beneath there, we've got some serious problems. We'll probably come back down to here. So for me, it's absolutely clear that I would be lightening the load, reducing my risk here. But I think you've had reason to do it in the past. Look, I'm going to go hold on the basis that we're okay with this. We're kind of holding the short-term uptrend. The candles from there aren't bad. But if you see another peak is simply a trading session. It's not today, but it could be tomorrow, where you have lower highs and lower lows. I would just be a little bit aggressive here, and just for safety, just do this. If I saw that, okay, if I saw the lower high and lower low, I'd just take a third off the table just in case, another third there, and that means you would have at most 1/3 on the basis that you've still got that long-term trend. Let us go. I've done all of those. Great work. That list is done. This list here, AZS from Barry, AZS. Hopefully it's still going vertically up. It's not. Look, today and yesterday, not great, but I don't think they're enough to get out. So I think we're happy holder there, Barry, but you know what to do more than anybody else. Weebit we've done for Warren. Let's do Warren's other one then, which is MSB. I think I told you that I would never buy this under any circumstances, Warren, and I'm going to go ditto on that today. I think I said something along the lines of, this company is a complete waste of investors' time now, before, and probably will be forever. Okay, so I'm not sure if you could read between the lines on that one, Warren, and get just sort of my underlying feeling on Mesoblast. You might need to watch the recording and replay it a few times. LYN, not bad, not great. It's still early. Yes, Anonymous says early stages. Yeah, it is. But there's some good stuff happening. You know, we are seeing the price action improve. We're seeing a short-term trend. We're seeing some white candles come in, but we are being impeded, I think, by that long-term trend. There's a little bit of volume there. And it's a very warm chart, but it's just not hot for me, unfortunately. And I'm going to struggle, I think, to get to the list because it's a massive list. Ben wants GDC. Oh, this looks really good. I like this one. Yeah, look, I know today is not a perfect white candle, but I've just seen these lower shadows. And let's say if it closes even here or better, then I'm happy plus 1/3 here, Ben. I think you can add some risk on this. I think this looks fine. And I nearly said good. I think it does look good. And I just changed the word to fine because I saw that. But no, I think it looks good. I'm going to upgrade that back to good and say it looks good. But yes, there are some levels there. But everything else here is, I'm going to go so far as to say, you know, it's pretty close to 10 out of 10 on everything else I want to see, okay, for a turnaround play. So this is very good. I love this big white candle because it just gives me such a sensible place. Again, thinking in terms of exits. You know, anything beneath there is a problem, but maybe even really sort of beneath here. But you could go minus 1/3 there, minus 1/3 there. Okay, we're getting into stuff knowing how we're going to get out of it. Happy 1/3 there, Ben. I think that one looks really good. I've done AZS. Let's go WC8. I know these are ones I tweet about a lot. Happy holder there. No reason to get out. I know, again, it's absurd, isn't it? Because most so-called experts are going to tell you, oh, you can't own that. Because it was 3 cents, now it's 12 cents. It still looks good. I'm still seeing signs of demand. This concerns me. This big candle here is a problem. And if I was to start to see lower highs, lower lows, confirming this as a POS, I'd be less enthusiastic about holding on. I might even start to lighten the load. But what I do have is a great set of technicals here to say, well, if I'm getting beneath this sort of stuff, I'm minus 1/3. And then there's, you know, I'm scaling out of it, okay? Because it is in hindsight, then a flash in the pan. But right now, look, I'm happy to give it the benefit of the doubt. If you haven't already got out a third, I think that warrants, even, I know it's posthumous, right? It's after the fact, ex post. Even today, I'd just lighten the load on the basis that that is a significant showing of supply. Okay, demand has responded really well. So we talk about demand side response. It's actually done really well. But I'm concerned about that. So I said plus 1/3 there. Let me change that. That'd be a minus 1/3 just for that candle, even though it was in the past. And it's actually not too bad right now. That candle is a monster. That's a species ending event. So I'm suggesting take note of it. ASX. Oh, okay. Need I say more? Where are my laws of demand and my laws of supply? Hey, that's a lot cheaper at $60 compared to $70 where it was the day before. Shouldn't people be flooding in to buy this thing? It doesn't look like it. I think there's quite a few people selling it still. A little bit of demand there. Would I buy this? Absolutely not. No chance, no ways, no hows. Am I surprised by today's move? Ladies and gentlemen, put up your hand if you are surprised by today's move. And there's going to be ASX has shock announcement, shock profit downgrade from ASX. There's no shock there. Look, do you think the big brokers, the big research houses knew about this, or they were completely in the dark about this? They knew exactly this was coming. That's why they were selling it like crazy, and very few of them were buying it. But there's always a few value funds out there. Oh, ASX is value. ASX is value. Big desk. Maybe it's even better value today. Reece Resources. Look, interesting. Certainly interesting. Could I buy that? Look, let me say, if today's candle closes at, it's currently at it's at 1.3 cents, right? 0.130, 1.3 cents. If it closes at 1.3 cents or better, I could buy that today, okay? But what am I putting into this? Let's say I've got $1 million in my trading account. Am I going to put $898,000 on this thing? No, I'm not. I'm going to put, 10 grand of my $1 million on it. I'm going to put a toe in the water, okay? Because if I can double it, because maybe this thing can do that, it might be interesting, but nothing more than that, okay? And understand, if you lose money on that, you lose money on it. Get on with your life. That's from Anonymous. Hey, Carl, can you look at Codan? I think Codan was looking good last time I looked at it. Don't think it's public holiday here in WA. I didn't look at the market yesterday at all. I had a wonderful day with my family, not looking at the markets. I think it's fine, but let's just be aware that we do have a POS here, okay? And it's a bit of an MPOS now, a major POS. Here, there's a pod. I don't want to see, well, in fact, we've already got a POS. Today's candle is forming a POS there. So what we don't want to see is this sort of stuff, okay? That's where we're saying, you know what? Bang, we're out of this one. Let's move on, find something else. Until then, happy holder. Why? Because the short-term trend is doing its job. These candles aren't bad, and that's this candle here and this candle here. But you can see there's some shadows. Even though those candles were good, pushing off that demand zone, the supply is pesky. And if you're watching this intraday, and I hope you aren't, that supply just keeps coming in, keeps annoying the hell out of me. RFT, which we've done, that one's for Carlo. We did that earlier on, Carlo. Check the tape. INR. I'm powering through these. INR, another lithium company. Great, because we've done a big lithium sector review today. Look, a good candle today. Would I buy it? Absolutely not, because one good candle does not a reversal make, but it's not terrible in terms of, well, we've got this and we've got this maybe, and maybe it's pushing back up, but then it's got to deal with this and it's got to do so much stuff before I could get interested in it. And you'll say, hey, Carl, why would I wait till it's done all that stuff and it's 45 cents? I can buy it now at 35 cents and save myself 10 cents. And I say, knock yourself out and see how that works out for you. I'd much rather have the certainty from the market telling me that demand is now overwhelming, supply is running away, and that's where I'll buy it at 45 cents. Because if it's going to back to not 90 cents or $1 or $100 million like you think it's going to get to, because if you're a true believer, that's where you think it's going, an extra 10 cents won't make any difference. That one's for Doug. RNU, no way. I've done that already. William says, thanks. I've done all those lists. Stop putting in new ones. Hey, Nick, Carl, skip my question. That's from Marco. Marco, what was your question? Put it in again. I don't want to skip anybody. But you have to understand, I've got 3 different inputs for questions, and they are all full. So I'm doing my best. Let me head back to the streamers and try and finish here today. From Brendan. Hi, Carl. Would you mind having a look at the supermarkets, Coles, Woolworths? Yeah, no worries. Absolutely. We've got problems here on Coles. It is breaking the long-term trend. We can see that when it breaks the long-term trend, it tends to go down a bit further. The short-term trend has turned down. That's not great. Are the candles predominantly white, like they were coming out of here, or are they predominantly black? They are black, and the price tags are not good. I can't be a holder of this. This looks really bad, and I totally accept tomorrow might be the day they start going back up. but I just can't see it. And I think the selling is sort of working its way over to Woolworths. It's not a great looking chart for me. In fact, I can't even go hold. Look at those black candles. Just the pervasiveness of that excess supply in the market there. Look, I don't know. There's a bit of an uptrend. It's not the worst thing, but would I be buying? Absolutely not. And then MTS, that's the worst one of the lot. That is a clear, unequivocal sell. That looks really awful. And, when they kind of look bad at the same time, that's not a good sign either, is it? Let's have a look. This is Lawrence asking specifically for technical analysis on SBM. Man after my own heart there, Lawrence, but not on the stock. I don't like the stock. I like the fact you only want TA and no FA. But this one is not looking good for me. Maybe it turns itself around. I don't know. But it's got to put in the price action. All the candles, all the white candles, that long-term downtrend zone, it's horrible. It's horrific. And it's holding, And look, geez, I wish we met years ago, Lawrence, because I could have told you much earlier than today that there's not a lot going on for St. Barbara there. Let us go. CXO I've done. Check it before John, different John, obviously, from the other John over here. ASN, another lithium stock. What is your obsession with lithium, people? Oh, did you believe the story, did you? You know what? It just more and more is convincing me of this boom to fizzle. I'm not saying bust, but fizzle story. And if I tell you to hold this because it's, well, okay, there's some demand in the system and it's, I don't know. It's just, there's so little in terms of demand and supply to guide me because it is so flat that who am I to say, really? But what I can say is that it's not excess demand. Hey, it's not excess supply, but it's not excess demand. So just because it's not excess supply doesn't mean it's a buy. I need to see excess demand to get into this. That's so flat. That's a pass for me. Let us go to PL. That might have been PLS, but I don't think it's PLZ. I did that earlier on. GCY. Okay. Gascoigne Resources. Fingerprints of demand. Didn't last long enough. Again, maybe too early there. If I told you to buy it, it's too early. And it's not happening yet either. I don't think we've ever had a session where we've had so many downtrends, big downtrends. And look, don't mess with them. Like, dude, stop messing with them. Stop it. GMD. Oh, look, I think I'm going to have to pull the pin. I think that looks half decent, but not decent enough. Good, not great. Mediocre, 5 out of 10. Make of that what you will. SLR, the other gold company. This looks horrific. This never got going, even when gold went up. Gold's struggling now. Why would this go up? Read the writing on the wall, ladies and gentlemen. Stop ignoring the market. Stop thinking that this is a great company because I did the research. You know what? People don't even think that. They just hold on to it because they got in at a higher price and they're losing money and they don't want to take that loss. Is that right? Is that you? Stop doing that. I can't get to the end of the bottom of this list. There's too many. Apologies for the streamers. Jump on the Zoom next time. Let us head here and say, I did my best, ladies and gentlemen. I'm exhausted. Hey, come back on Thursday. I'll take a day off and I'll answer your questions on indices, commodities, forex and crypto. And then on Friday, we'll do the US stuff. If you're not a client of Think Markets, you really should be because you won't get eaten by a shark. I clicked the wrong button, but we are the good guys. That's what I want in the Australian broking scene. I showed you today how you can avoid paying brokerage at all and trade like a fund manager. Just buying some shares and then flicking a few out for no other reason, but we got a minus 1/3 and then seeing how we go on the other 2/3. You've got the ability to do that if you're trading commission free, and you can do that with us, but you can also trade FX indices, commodities, futures. Now, CFDs might not be for you. So give us a call, head to thinkmarkets.com/EU, hit us up on the chat window. We do have some wonderful people. They're not chatbots. They are intelligent, but they're not artificial. Okay, and they can tell you everything you need to know about CFDs and why you should open an account with us. If you're watching on any of the streaming services, hit the subscribe button to stay notified of all my future video updates. Tell your friends. I'm sure they could get a benefit from watching these as well. And hit the thumbs up button to let me know you like what I'm doing so I continue to do more of it. That's important. Apart from that, it's been a pleasure chatting with you today. All the best for your trading and investing until we catch up again. Bye-bye for now. The disclaimer before you leave, everybody, says that everything we've discussed today is general in nature. It has not taken into account your personal financial circumstances or particular needs. So before making an investing decision based upon that general information, you should consider it carefully or seek the help of a financial professional. You can learn everything you need to know about Think Markets by heading to our website and downloading our PDS.